John Nigerian said they should do 75. If they give us 50, we'll be down 400 points before the selling stop.
AMC continued push high day there with volume.
You've got AMC getting a pop here to the high as well. Sorry,
I whispered it.
Sorry.
I can trade AMC, so I'm not as mad about that one, but I
Okay.
prefer GME. The rapid fire bullish in the meta. Next week's 187.5 calls are paying 54 cents. I have a line on meta 166.71, pretty strong resistance.
If it does rip today, they're going to rip it up tomorrow, Scott. That's what I think. That's what you've seen time and time again. If the market reaction is extremely positive and you see a 500-point face ripper rally, then I would say you're going to see negative for Wednesday, Thursday, and Friday. And I'd say you talked about zooming in, Scott. Let's zoom out just a little bit. So I agree that obviously a 4% rate that Steve just mentioned is tolerable, and we can rally. And to Mr. Wonderful's point, if we've got 9% returns in the market, yeah, 4% is fine. But I think that during these 15 years, you've been goosing this pretty good with really low interest rates. So most of the gains here have been with those low interest rates. They haven't been with significantly higher interest rates. And so I'm not as certain as the rest of many of my colleagues that we can just go right back to, oh, it's only 4%, and gee, it was 16% in 81. That's not really what we're looking at here. Again, you zoom out and you see a market that really will not tolerate, in the short term, will not, in short term, I'll say 3 to 6 months, Scott, will not tolerate significantly higher rates. And we heard from Ford today that delinquencies are up. We're going to hear it from GM. We're going to hear it from everybody on credit cards, on mortgages, and that's before the 75 basis points kicks in. After that, that's where we really have the risk that the Fed drives us to a recession, which I say is a 70-30 proposition at this point.
Wow. I need to know from you, Joe, where do
XOP continues to see put activity. They've been pretty active with some larger blocks into the 715, 146 puts. They did just come in and sweep that for XOP. You've got BABA seeing smaller for this week's 110 call, spot 106.73 for BABA. You've got FCEL seeing some spec flow, smaller size here coming at high a day. The six started with the 617, 350 calls, paying 12 cents, 10,000 behind that. And then also the 714 and 450 calls. Again, smaller there, but all coming in back to back for FCEL. Got Amazon with a 950,000 share dark pool print up here at high a day, the 106.85 AMZN.
CNBC bringing out Tom Lee after the break. Do y'all want to hear Tom Lee or no?
Yes.
It's a nice.
I think markets have already priced in 75 if you look at interest rate futures. So I would say that makes a lot of sense because the Fed doesn't necessarily want to surprise markets. And I think that I'd agree with those who say that a move like today is probably better for risk assets, only because it really narrows the perception about how far the Fed is behind. You know, a simple way to look at it is the spread between the 2-year and Fed funds, which Jeff Gunlock has mentioned many times. And it's at the highest level since May 94 today. But after the hike, this brings it down to levels that were actually lower than we were around April this year. So I think in some ways, you know, investors could actually start to feel better that the Fed isn't as behind, fewer sort of upside surprises. And of course, the data has to start cooperating going forward.
But they're going to be really aggressive going forward. Don't you agree with that? You saw Fed funds futures, what Leisman was talking about, where rates could really be going. The market's just going to be just fine in that scenario. I think people have a hard time believing that it is.
Yeah, there's I would say that nobody can say the macros is super clear right now. I think it's been helpful to see some of the slowing and the job cuts, because that just shows the current hikes and the current tight financial conditions are slowing the economy. And I think, of course, the unknown is what happens with gasoline, because that is really driving people's perceptions about CPI. But on the flip side, I'd agree with what Kevin and Jim have been saying. You know, there's a real test happening to corporate America here. You know, in the pandemic, people expected earnings to collapse, but companies slashed costs and managed through that well. And I think that really earned them a view that they're kind of much more durable than people expected. And now I think investors are also assuming that companies are going to get massacred in this current environment. But if they're going to navigate through this better than expected and earnings hold up better, then we're talking about a situation where investors are risk off. The Fed isn't necessarily going to shock markets with further surprises. So even if rates, you know, if the Fed hikes from here, a lot of that's already priced into future interest rates. So there's fewer surprises to discount rate and what you think risk premia should do. And so I think stocks could do a lot better.
John Najarian, I want your counterpoint, I suppose, because you're extremely negative, it sounds to me, against what is Farmer Jim and Kevin O'Leary and Tom Lee's optimism.
Yeah, I mean, I'm an optimistic guy overall, Scott, but I'm also a realist, and I'd love to hear Tom's opinion on. Tom, you heard today that Ford had significantly higher delinquencies. Granted, that's coming from a low rate. I get it. But that's only going to be accelerating for the next year. That's going to go over to credit card debt. It's going to go over to mortgages. We all know how this snowballs. So how can I be as optimistic as you, Tom, if I know that consumers that are 70% of the economy are going to be strapped? They're not going to be able to trade, you know, as far as there'll be more people renting because home affordability is going to be going down. Meeting that mortgage payment is going to be a lot tougher unless Biden actually did something about an energy policy, which he has only done a negative energy policy so far. I mean, you already said the price that will be paid to transport items for people. I mean, increasing interest rates doesn't bring food prices down, doesn't bring gasoline prices down. It just doesn't. You can impact other things, right, but those two will not be brought down because people have to eat and they've got to get somewhere.
Strapped consumer, right? If not now, it's coming.
Yeah, there's this is sort of the peculiar, that would be peculiarly positive actually for equities, John. And it's not because I want people to lose jobs and not repay their loans. These are obviously, you know, bad signs, but in the aggregate, it actually has two effects. One is it's really going to slow the perception about inflation, because if you've got delinquencies and repossessions and housing slowing, well, that just kills two stalwarts of the inflation narrative. You know, one is housing and owner's equivalent rent in the future, and the second is goods pricing. And it also weakens the job market. And as you know, the Fed is really concerned about how tight the job market is. So I think if what's happening on the margin actually supports the idea of a soft landing. And if it's a soft landing, the Fed doesn't have to go as far. That's a very minority view right now, because I think people are really concerned about inflation. But it's even if you look at things like the Cleveland inflation tracker, core inflation is cooling, not maybe fast enough for the Fed, but there are signs of cooling. And if we add all these things, it means core inflation could drift lower. And that's probably the best news for risk assets.
I mean, and they're not only worried about inflation as to why they think there's not going to be a soft landing. It's because history suggests that the Fed can't pull it off. And maybe that's the overwhelming factor in the reason why there is a level of pessimism that the Fed can do what the market suggests is going to happen by Fed funds futures, and then somehow they're also going to have the incredible ability to avoid a recession. We will see. And Tom, I know we'll talk to you multiple times in the weeks and months ahead. I got to run.
Damn, BA is relentless. Interesting dark pool print here in AMH, which is American Home for Rent. You get 2 million shares at 33.15. That's representing 58% of 30-day average volume. Yeah, that's definitely some size there in XLF. The 819.33 puts. Is that 10 million?
We had swift bullish into SST, the July $10 calls being 40 cents.
All right, really quickly. So the reason why the reason why I got in Tesla was a rising wedge break. So that's the reason why I got in. The reason why I've held is because for two reasons. Number one, here on the 15, you can see right up there, 686.85. That right up through that area was going to be my stop north of there, say around 687. But you can see right there, that is an area that we have now hit as resistance, at least in this, in the, in the near term. So we'll see. And then on the hourly, you also have resistance in that same area. But here is the 89, 685.72. So that 685 to 686.90 area right up through in there, that is going to be some longer term resistance, both on the 15 and the hourly. That's my stop up through there. But as you can see, we've hit that area and we've pulled back just somewhat. So I'm going to be watching here to see if we break this 34. If we do, next stop would be the 89. I've got the 34, 682.29, 89, 679.40. We'll see if either one of those comes into play, but that's the reason why I've continued to hold. And like I said, I got in on a rising wedge bearish break. So we'll see. But at least in the short term, you have any chance at downside, you'd want to see the 34 break. That's been trend support, which is bouncing off of right now, 682.31. And then, like I said, underneath that's the 89, 679.47. SPY just broke an uptrend here to the downside on SPY. I'll go ahead and put the chart in here, but you can see, we'll see if this gets any volume right here, but SPY just broke an uptrend here to the downside. Next support I have on SPY, 377.53.
It's a short one side, but Swan does a great job going over that so you can get a better idea of what the data is showing.
You have large bullish into TROW. The January 2023 60 calls are paying 51.49, 1.03 million behind it.
Unusual activity coming up after the break.
Right now that I've had since 2008, just over 60%. I did a lot of those, Scott, just because I don't know what the next move is going to be. I think 75 basis points is correct today, but I wanted to just trim the herd a little bit and be ready for a significant decline. And if Mike Wilson's right, and he's been right for a long time, I'll be buying back in a lot cheaper than here.
Yeah. So you sold stock in BlackBerry which I forgotten that you'd even had. And you also sold Gap shares.
Yeah, me too. Yep.
You sold the Gap shares. Just take me through the Gap stock. You also sold calls in a lot of things. I'm not going to get to. You could tweet those out for people because there's too many to mention. But selling stock in Gap, you sold your position. Why?
Well, I get emails every day, like many of your viewers, that are basically 60% off, 70% off sales. There's no, I know Target has to cut too, Scott, and that's one of the options that I sold was calls on Target, quite frankly. Sorry, Brian Cornell. But I sold many of these retailers because I think they're just going to flush it. I think they're just going to have to cut price dramatically to move things. And again, it's a broken record, Scott, but that's before they move interest rates up and people start having tougher and tougher credit going forward because of these higher interest rates. So the biggest debtor is the U.S. It's not you and me, Scott, but this is also going to hurt the U.S. pretty dramatically, those non-payments of interest, even though we sort of make it look like we make payments. We don't really. So these bonds, I think, are in trouble still, even at these levels.
I feel like I'm doing a little bit of a disservice to people if I don't read these names. You tweet them out still, but I'll just run through the names you sold calls in. ChargePoint, Cinemark, Lennar, Marqeta, Nike, Palo Alto, Palantir, Square. You mentioned Target, the VIX, the XLE, the XLF, eBay, and Rocket. So things that you have talked about on this program on numerous occasions, you no longer own, whether it's options or stocks. And Doc, you can go into more specifics on that later if you want to, but nonetheless, at least we get that out there. You do have unusual activity coming up too, and we'll do that next.
That was interesting. Nigerian saying he's at his highest cash position since 2008, 60% cash. Tesla just broke out of that rising channel to the downside, getting a little bit more downside here on Apple as well. UVXY pushing up very slightly though. It's UVXY is still right here under resistance at the 89, 1553 is where I have it.
They just hammered Expedia this week's 105 calls, roulette, and steady bullish, over 800,000 there.
All right. You asked me if I'm short. I'm going to short some more. I'm going to plead the fifth, but Tesla just broke out of this channel right here, and it broke below the 89. Here is the chart. So it is out of this rising channel right here, and it's 89 right here. It's going to be your next area support, 680.62.
These options expire on Friday, this Friday. So Meta's the first one, META. Obviously, the name change not really helping them out much. And they're buying the 155 puts. The stock was about 164 at the time. Second one, this is a call. It's in the HYG, a high yield. They're buying also June, the 7650 calls. And this one was with this HYG, I believe around 74 and a little change, Scott. I'm in the calls there, and I'm in the puts on Meta.
All right, good stuff. We'll do final trades now.
You've got some larger size coming into the UVXY. This is going to be the 7/8 $16 call, spot 1547, just shy of 600,000 into that strike and expiration UVXY.
So obviously you've been, taking a lot of pain. What are you doing with it?
Yes, I have. Yes, I have. I own Bitcoin and 32 other blockchain positions and projects. Here's my thinking. In the next week or two, we're going to hear a big player go to zero. We had this over the weekend with Celsius. It got basically gated. It's going to go to zero. But I'm talking somebody big. I don't know who it's going to be yet. Somebody's over-levered. When they blow up, there'll be panic in the streets. That'll be the bottom. That's always the bottom. It's a long-term capital strategy. You need an event. We don't have it yet. I'm suggesting Ethereum is probably the most, if you've never played in crypto land, this is a payment system. It's been crushed along with other crypto. It's right. my pick. Buy some ETH, Ethereum.
Okay, good stuff. Carrie, I need a name from you for final trades.
Schwab.
Okay. John Najarian, a name?
ICLN. Bought that ETF today.
Good stuff. Farmer Jim.
Boeing.
Okay.
CRISPR.
CRISPR? Okay. I will see all of you in a few hours' time with Jeffrey Gundlach, backside of the Fed. That does it for us. The exchange begins right now.
Rallying, but marginally so, because it is very much a wait-and-see pattern, but it doesn't take away from the fact, Kelly, that we are green across the screen, across the board. The Dow Industrial is up about 100 points, roughly about 1/3 of 1%. The S&P 500, 2/3 of 1% gains, 25 points, 37.61 the last trade there. And the composite index, a.k.a. the NASDAQ, up about 1.5%, 149 points to the upside, 10,000. 977. Now, interest rates a key part of the overall market narrative every day, but especially on a Fed day. To that degree, to that end, the 2-year note yield is ticking slightly lower, 3.33% last trade there. And then the 10-year note yield, 3.4041%. So again, that inversion is not there just yet, but it's kind of close. We'll keep an eye on that 10-year Treasury note yield. Remember, we're going back all the way back to kind of the highest levels since 2011 at this point here. So if you take a look at this overall picture, this is going to be a huge thing to watch with that 10-year Treasury note yield. And then tech and financials, a key focus for many traders and investors today. The bank trade, a key there for many out there. JP Morgan Chase, Bank of America, both up on the day so far for that big bank trade. And Apple and Amazon, when it comes to big tech related type companies, Apple is up about 2/3 of 1%, 3% gains from Amazon. But remember, Amazon has been hit especially hard during this latest downturn in the NASDAQ, so perhaps a little bit of a catch-up trade ahead of that big Fed rate decision. Kel, I'll send things back over to you.
There's Expedia high day after that flow came in. You have Bitcoin starting to tumble back down towards 20,000. You have MSTR losing VWAP, a little bit of acceleration to the downside. Wonder if people are thinking that MSTR is the big one that blows up from his comment.
We got CVX, new low a day. You've also got a bigger put sweeper into KRE, which is the regional banks, 916.58 puts with 1 million behind that. AMD with a 600,000 share dark pool print at 87.75.
Watch that, I'm golden bill, I mean like bankrupt, like gone. Watch that rising wedge there on MSTR. Is an hourly time frame, so take that in mind. You ever let bearish into CVE? This week's 21 puts, they're paying 25 cents, 85,000 behind. You ever let bullish into shop? This week's 317.5 calls are paying 1069, 144,000 behind. You repeater bullish into Expedia. This week's 105 calls again. They're now paying 2.5.
They added into that UVXY position the 7, 8, 16 calls with another 237,000.
Roulette bearish KBH. This week's 28 puts. They're paying 65 cents, 65,000 behind.
Mel was mentioning Alcoa earlier today. It's still, I mean, it's off the highs a little bit, but it's still holding up really well.
Friendly 30-minute reminder until Fed. You have roulette bullish into Starbucks. The 74 calls are paying $1.24, 62,000 behind.
I'm sorry, I had to step away and get the kiddos set up with some lunch. Did we get that, or was that mentioned that that 420 was canceled in Meta?
Yeah, but then it came back in
Yeah.
orange, like they redid it.
Like out of sequence. Interesting.
Yep, 28 minutes to the biggest Fed decision of your lives.
You know, I don't know why, because I've got somebody else that messaged me because they're not seeing the orange. I'm not sure what would make that show or not show because I do see it. Yeah, he put his Opflow only has values. He was asking for his. And Appa's is completely open, like I have mine. Oh, thank you, Gym Leader. He said he confirmed a bug with support, that the orange out of sequence is not reseeable if it's not coming in on the live tape.
All right, here's your daily dose of NSFW humor while it's slow. Don't click on this if you're easily offended. We'll black this out, delete here in just a second. But if you're easily offended, do not click on this. Not responsible for any reactions to this one, but here you go.
Well, you've got additional size coming in here to XOP 819 120 puts, spot 149.75, about 800,000 there. That's pretty far out of the money on those XOPs. All right. Appa really can only send you to support on that one so that they can be able to look into it further. So definitely reach out to support at blackboxstocks.com when you have any issues like that so they can know that something needs to be reviewed on the back end of the system.
You roulette bullish into LRCX. This week's 480 calls are paying 453, 76,000 behind it.
It looks like you've got this player that we already have positioned in XOP, the July 1st, that larger position, the 140s, coming back in. So they're white because you have that larger position, but this contract price in IV is going up. So it looks like they're adding to that existing position another about 650,000 or 700,000 onto that for XOP. It's the XOP, it's that larger positioning that we had come in right after the XLE on Monday, July 1st, 140s.
I don't know. MG is getting a little pushier. Some volume on Twitter. We had roulette bearish earlier. We now have roulette bearish and bullish into MasterCard. They're hitting the 322.5 calls, 105,000, and the 317.5 puts 75,000 out of the Fed here.
All right, this is a NSFW one. I posted this one in there earlier, but somebody asked me that I guess they didn't get it before I deleted it. Again, not responsible for any reactions, not responsible if you're easily offended. Do not click on this. I will delete this in just a second one, but I got a good laugh out of this one. Actually, I wrote this one, but I'll put it back in here. Somebody I guess was trying to copy it for one of their family and friends or whatever. But here you go. I wrote this one, but I'll delete this in just. All right, SPY just broke this trend to the downside right here, rejected there off of VWAP 377.55 and broke this trend prior to Fed. Albert, I mean, you can watch a live stream if you want, but I'm going to feed the audio in here. I'll feed it from the interest rate decision at 2. And then once there, I won't, I'll cut it off for a little bit there because they'll go through their whole like, what's, guessing what's going to happen, all this, that, and the third. And then when he gets ready to speak at 2:30, I'll feed his statement in here as well. All right, folks, I got about a minute and a half to go to the interest rate decision and advance statement. Again, I'll put the audio in here when it comes out.
Adult about this.
15 seconds.
What do they have? 75 basis points.
Yep, simple saying 75.
Perfect. Thank you.
Decision. 75 basis points. The Federal Reserve Open Market Committee raising the funds rate by 75 basis points to a new target range of 1.5 to 1.75%. First time they've done a 75 basis point rate increase since 1994. It plans to continue its plans to reduce the balance sheet as laid out in the prior month and anticipates additional increases in the funds rate. To wit, the new forecasts from the Federal Market Committee show that they see the rate outlook for 2022 at 3.4%. That's up from 1.9. Pretty much meets where the market is. For 2023, it's boosted its own rate outlook, the median official, to 3.8% from 2.8%. That's a full percentage point increase. And again, pretty much meets where the market was at. Maybe the market where the Fed was at. We don't know which way this works, but it is one of the most dramatic increases in the outlook, the near-term outlook for sure, of the funds rate that we have since we've been publishing this thing since 2011. The Fed repeating that inflation remains elevated. Pressure on it says the China COVID situation, the lockdowns there are worsening supply chain problems. Economic activity, it points out, picked up in the second quarter from weakness in the first, obviously. It cut, however, its 2022 and 2023 growth forecast pretty sharply for 2022 by 1.1 percentage points, boosting the unemployment rate a bit for this year, 3.7%. But when you go out, they've raised it by 0.5 point in 2024. Boosted its core inflation outlook just a bit to 4.3% for this year, but otherwise sees core inflation declining to around its target of 2.3% in 2024. Finally, this was unanimous except for the